Welcome back to our channel, where we delve into the world of finance and cryptocurrencies. Today, we're going to discuss a topic that has been on everyone's minds lately: the cryptocurrency crash and the valuable lessons we've learned from the market volatility. If you're new here, make sure to hit that subscribe button and turn on the notification bell, so you don't miss any of our future videos. Now, let's jump right into it. Over the past few months, the cryptocurrency market has experienced a significant crash, with prices of many cryptocurrencies plummeting. It serves as a stark reminder that investing in cryptocurrencies can be highly volatile and unpredictable. However, this crash has also provided us with some crucial lessons. Let's explore them one by one. Lesson 1. Diversify your portfolio. One of the fundamental principles of investing is diversification. The cryptocurrency crash has reiterated the importance of spreading your investments across different asset classes. Putting all your eggs in one basket can be incredibly risky. By diversifying, you can mitigate the impact of market downturns on your overall portfolio. Lesson 2. Do thorough research before investing. In the hype and excitement surrounding cryptocurrencies, it's easy to get caught up in the frenzy and invest without proper research. The crash has highlighted the significance of conducting thorough due diligence before putting your hard-earned money into any cryptocurrency. Understand the project, its technology, team, and potential risks involved. Lesson 3. Set realistic expectations. Cryptocurrencies have experienced astonishing gains in the past, leading many to believe that massive profits can be made overnight. However, the crash has shown us that these gains can quickly evaporate. Setting realistic expectations and understanding the volatile nature of the market is vital. Avoid falling for get-rich-quick schemes and focus on long-term strategies. Lesson 4. Keep emotions in check. Emotions can be detrimental when it comes to investing, especially during times of market turbulence. The crash has reminded us of the importance of keeping emotions in check and making rational decisions based on facts and analysis rather than fear or FOMO, fear of missing out. Emotional trading often leads to poor outcomes and unnecessary losses. Lesson 5. Have an exit strategy. Having a well-defined exit strategy is crucial in any investment, and cryptocurrencies are no exception. The crash has highlighted the importance of knowing when to cut your losses or take profits. Setting clear targets and sticking to them can help you navigate turbulent times with more confidence and minimize potential losses. And there you have it, our valuable lessons learned from the recent cryptocurrency crash. Remember, while the crash may have shaken the market, it's also an opportunity for growth and learning. As always, if you found this video helpful, give it a thumbs up and share it with your fellow investors. Don't forget to subscribe to our channel for more informative videos on finance and cryptocurrencies. Until next time, happy investing!